Welcome, Leeb Group viewers. I'm Greg Dorsey. Today's Monday, August 31st. It was a down day today, but the market rose for the month. The market remains overbought technically and is far overextended on a valuation basis. Today, I thought we'd discuss some overlooked but very useful indicators. In this morning's New York Times, there was an article that included a mention of investor sentiment, which hasn't been this bullish since the market topped in October of '07. I don't like to use the term dumb money, but as a group, investors can be quite contrary. They were likewise extremely bullish at the market bottom in October. The smart money, meanwhile, corporate insiders, can't unload shares fast enough. TrimTabs has reported that August insider sell-buy ratio of more than 30 to 1. In the past 4 months, companies have been net sellers a record $105 billion in shares. $105 billion in shares. It just doesn't get any more lopsided than that. TrimTabs also is reporting a big drop in NYSE short interest and a corresponding spike in margin debt. Now, the market itself isn't looking very pretty. We've pointed out repeatedly the lack of volume. Much of the volume that is present is coming from junk stocks, and it appears to be generated from liquidity providers tasked with generating liquidity and collecting fat rebates for their efforts. The actual usefulness of this activity is really quite questionable. When the marginal buyer ultimately goes on strike, as we think they will, the market could plunge. Market internals, meanwhile, are starting to deteriorate. The ARMS index, which is a short-term technical breadth indicator that combines the advanced decline line with up volume versus down volume, now is at its lowest level in years. In fact, it's lower today than it was at the market top in '07. Finally, we have small caps, which are losing their edge. They had been leading the market, but now they're starting to trail the blue chips. This latter point isn't at a critical juncture yet, but it is another sign that the market's advance is on shaky ground. So the advice is pretty much what we've been saying for quite some time now. You want to be cautious. You want to have some hedges in place, and you may even want to look to profit from an advance in the market and a decline in the market by using some sort of shorts. That's all for today. Thanks for stopping by.